Well, folks, how about that? I am finally back in Vegas, and let me just say this, it feels good to be truly back home. I've been in Arizona for quite a while now at this point in time, so I'm very, very happy to be back in Vegas and get back to normal routine and all that good stuff. So, yeah, yesterday was a travel day for me, so I didn't get to post on the channel. Please forgive me for that. But I did do a little something yesterday, and that was I spent over $100,000 on stocks yesterday. It was a very big buy day for me. And so in this video, I'm going to take you through all the stocks I just spent money on, why I bought them, why I'm excited about them, and all that good stuff. So hope you guys enjoy this video as always. I appreciate y'all joining me. Thanks for being subscribed, folks. Yeah, a whole bunch to get into in this one here day. And also, last night, I spent over $13,000, and it wasn't on stocks, it wasn't on real estate, it was on six-figure trophies. Oh my gosh, that's the first time I've had to place a major order for 6 or 7 figure trophies since, honestly, the last time I did that was over 2 years ago. Over 2 years ago, that's how long it's been. We've been in a drought. I haven't needed to place any major orders, and last night I just spent a lot of money, over $13,000. But yeah, if you don't know, a lot of people in the private stock group are hitting 6 figures in their portfolios this year. I mean, it's absolutely incredible. So these little awards are, a little expensive. Let's just put it that way. And they're heavyweights too. And then once you hit the 7-figure club, you get this bad boy right here. And if you didn't know, we got the 5-figure club for Patreon members who are in the Discord chat who hit 5 figures for the first time in their portfolio. So, congrats to all you guys out there that are hitting new records, new milestones in your portfolio. Make sure you go out and celebrate. And if you do celebrate at the Cheesecake Factory or North Italia, if you want to live a little fancy, okay, somewhere like that, all right? Texas Roadhouse is fine too, okay? Texas Roadhouse, you want to go to Texas Roadhouse, celebrate your new milestone, you have my blessings for that as well. All righty, guys, let's get into this. First stock I spent a ridiculous amount of money on yesterday is PayPal. I bought $51,000 worth of PayPal stock tomorrow. That's a windfall type spending day for me out there. That does not usually happen. I mean, usually I buy for stocks, maybe hundreds of dollars at a time, maybe thousands of dollars at a time, maybe 10,000. $51,000 is a pretty incredible number, okay? PayPal is, how do I put it? Stealing money? That's the best way I can put it. It's a stealing money stock for me to be buying these shares at this disgusting valuation. It's absolutely ridiculous. Now, this is the biggest buy I've done in a day for one stock. And remember, I spent over $100,000 total yesterday, right? But $51,000 just on PayPal. This is the biggest buy I've done since Q4 of 2022, which I basically spent $77,000 on Meta stock in a day, okay? Well, technically, I guess, according to the video, it was in 7 minutes. But at that particular time, Meta was just trading at such disgusting valuations that I'm like, this is ridiculous, okay? This is like easy money. And that's exactly the way I'm looking at PayPal right now. It's so disgustingly undervalued right now. The chance I lose money in the stock is so low. The chance I double up or triple up my money over the next 24 to 36 months is extremely high. That I'm like, it's just, for me, it's almost like a no-brainer now at this point in time, okay? No. Keep in mind, this company has scaled from about, a little over $10 billion of revenue in 2016 to last year they did $27.5 billion of revenue, right? Now, this was during an e-com recession, a massive e-com recession. When stocks like Shopify go down 70+%, when stocks like Amazon go down 50+%, you're in an e-commerce related recession, okay? And that's exactly what 2022 was, right? And it was coming off of obviously Rona, all the stimulus, everybody forced to be home, everybody could just spend on goods. And so last year was horrible. But things are starting to slowly come back. So keep in mind, this incredible number they put up was during an e-commerce recession. So imagine the numbers PayPal is going to be putting up over the next several years, right? No, when it comes to PayPal, I'm getting a lot of money on the balance sheet, right? Keep in mind, PayPal's market cap is so low now because the stock's dropped so much over the last couple of years that, it's not a big market cap company in relative to other big techs. It's actually a little guy, right? And here we are with a company that has cash and short-term investments of over $10 billion, okay? Now, there was one major risk factor that I thought about with PayPal. Okay, I think about all the different things. Okay, competitors. Oh, they always had a million competitors. Okay, this is nothing new. They've been competing with all these guys for 10 years. Competitive space, absolutely. PayPal outcompetes them, and it's clear as day. That's why they put up the numbers they put up, right? And so I always think about all the different risk factors with this, right? FedNow is a joke. I mean, at the end of the day, is that going to have any material impact on PayPal? Very low probability. We know the government does not compete well with private sector. Bottom line, they always get beat. So I'm kind of thinking about all these risk factors, but there was one risk factor that kept coming to mind that, I guess you can say would keep me up awake at night. It doesn't actually keep me up awake at night, but it's just a saying, okay, of like something that worries you. And the one thing that worried me in regards to PayPal, they look like they're getting rid of that problem, and it's getting rid of it fast, okay? And that one problem is this. It is the buy now, pay later business. Now, this is a great business for PayPal, but I don't like it if PayPal has to hold on to the debt, right? Because I always worry, like, what if there's a big recession? People aren't paying back these buy now, pay later loans, right? And PayPal's stuck holding the bag in that situation. That mean epic losses for PayPal, right? Of billions of dollars, billions and billions of dollars of losses, right? Which would obviously hurt profitability in a major way. I wouldn't want to see that, right? But recently, PayPal is just pretty much, I don't want to say they've gotten rid of that problem, but they look like they're on the road to getting rid of this problem, okay? PayPal and KKR announced exclusive multi-year relationship for European pay later receivables. Now, this is phenomenal. This deal is specific in relation to France, Germany, Italy, Spain, United Kingdom for any buy now, pay later loan receivables. So this is a brilliant hedge by PayPal, in my opinion, where they can still benefit from buy now, pay later. They won't benefit as much because they're not the ones that are going to actually likely hold the, we can call it, I guess you can say, debt in this situation. KKR is going to do that now. But I love this. This is like, when I saw this gave me even more conviction than ever around PayPal. This was like the thing that put the cherry on top, I guess we can say, of like the ice cream that I was already like, I was already going to eat this thing, okay? And so now I can tell you decent probability they're going to do this in the U.S. as well if they can do it with either KKR or somebody else, because at the end of the day, PayPal is looking to likely hedge in this situation, right? Now, the beautiful thing with PayPal, the valuation is disgusting. So cheap, it's ridiculous. That's why I call it stealing money. I mean, we're trading at P's of, forward P's of 13, 11, 10. Come on, man. That's the type of PEs you're talking about for a company that's doomed. They're going to shrink forever. It's, their best days are way behind them. That's not the case with PayPal. Wait to see the revenues in a few years from now in the EPS. This is a company that's expected. This is analyst expectations. These aren't even my expectations. I probably have a little higher expectations for PayPal. But just based upon analyst expectations, they're this company growing obviously very nice double digits in terms of EPS. And I think those numbers are low. I think every one of those numbers are low. I think they're going to grow much more than that. But even if you're just going to base upon what analysts believe, right, then this company should not be trading at these sorts of value. You don't put companies that have forward P's of 10 or 11 on them and say they can grow double-digit percentage EPS year in and year out. That's not the way this game works, okay? And so, nonetheless, this company is so disgustingly undervalued right now. No, the thing with PayPal, right, is the way I look at PayPal is it's kind of this mansion that's like built in the hood, okay? And so you're looking at it, it's like, wow, this is such a beautiful home here, but it's in such a neighborhood that we're not too sure about, right? And that's the way PayPal is in the stock market, because PayPal is stuck with a lot of stocks around it that are very questionable, or people look at it very questionable, okay? For instance, it gets grouped into the same class as a stock like Square, right? Where I don't personally have a problem with Square, but let's be honest, there's a lot of people that do have problems with Square, okay? Hindenburg Research, right, which is a famous kind of, I guess you say short sellers. They do these very in-depth reports on these companies and really go after them. They did this extremely in-depth one a few months ago on Square, right, called Block, and how inflated user metrics and frictionless fraud enables insiders to cash out over $1 billion. They went in on Square, right? And so PayPal gets grouped into a stock like that. PayPal gets grouped into a stock like Affirm, right? Affirm is down 86, 87%, right? And a lot of people are wondering if there was a big recession, if Affirm would even be around anymore, okay? Even if there was a mild recession, people are concerned if Affirm would even be around anymore at that point in time, right? So you look at a company like Affirm, and this is the type of companies that PayPal gets grouped into. Another company is Upstart, right? Upstart's a stock that's down 77% over the past, we can say 18, 20 months, something like that. And the way I put it to you like this, right? Remember my meta buy, right, from last year in Q4 of 2022, right? I'd put it to you like this, and this I think will click for a lot of people in their minds, okay? This is like saying Meta should get grouped in with Twitter. Meta should get grouped in with Snapchat. It doesn't make sense, okay? It doesn't make sense at all. Like, Meta's a whole different animal that's just, their scale is so much larger, they're so much more dominant, they're so much bigger, they're so much better in with advertisers. Like, you shouldn't, like, to group them in with those sorts of stocks, you could do it, but it's stupid. It doesn't make sense. And that's exactly what they're doing with PayPal. They group them in with these other companies, and it's like PayPal's a whole different animal. You can't just say, well, because this company is similar to this company, they're the same. They're not the same, okay? It's the same as like trying to say Amazon's the same as eBay because, gosh, they both sell things online, so I guess Amazon's the same as eBay, right? No, of course not. It's ridiculous. It's preposterous. But this is what people do, okay? And this is what Wall Street does. Doesn't make any dang sense, but they do it. And it presents somebody like myself, in my opinion, a phenomenal buying opportunity and an ability to make a lot of money over this next few years in a stock like this without taking very much risk, in my personal opinion. We'll see how it all plays out, but that is my belief, okay? Now, in relation to me and kind of how big my PayPal position is getting now at this point in time, okay? So these are the shares I own in the public account. I own 718 shares in the public account. I do own it in the Patreon portfolio as well, PayPal. It's actually up to my second biggest position in the Patreon portfolio now, but this is a public account. So 718 shares there. I also, in terms of the shares I bought yesterday, that was in the an Ally account I have, which, I've been trying out Ally for the last, year or so as far as their investing platform. How do I put this nicely? It's not very good, okay? Especially when you come from Fidelity Investments to try some of these other services is like, ugh, like, are you kidding me? Okay, but anyways, I still do have an investment account with Ally, and it's not fun kind of investing with them. But nonetheless, folks, yes, that is PayPal there, okay? So, love that one. Next stock up here that I put a lot of money into, and this one, I'll be honest, I'm adding this one extremely aggressively right now. This next one, I'm pretty much just as concerned about it going up substantially over this next 6 months or so that I am PayPal. Like, PayPal in this next stock, I am buying so dang aggressively right now because I'm very concerned that they're going to start shooting higher and it's going to happen quicker than kind of a lot of people are expecting, okay? And that stock is the stock that follows, and that is Cheesecake Factory. Not a type of stock you'd really usually have to worry about going up a lot, but I'm actually extremely concerned that this stock's going to go up quite substantially over the next 6 to 12 months, which is why I'm trying to move with urgency in regards to cake, okay? I bought $34,000 worth of stock yesterday in regards to cake, okay? This is a stock that's just another one trading at silly PE ratios, right? 12 forward PE on this stock. A dividend yield of 3% plus. The beautiful thing is, let's say cake doesn't move for the next 6 to 12 months. Let's say I'm buying. Say it doesn't move, which I would actually be okay with that. So let's say it happens. I get to still collect my 3% plus dividend yield, which, I guess you can say keeps me happy, okay? And I get to buy the stock for a longer period of time. Now, cake's another company that, once again, I feel like analyst estimates are low in regards to the stock. But even if we were to say analyst estimates are accurate, this is a company that's supposed to grow easily, very nice double digits EPS a year in and year out for several years to go in the future, right? And forward P on the stock is, 10 based upon 2024 numbers, 9.9. Like, come on, man. Like, you want to give me money? Like, give me money then. Jeez, okay? We're talking about Cheesecake Factory, which obviously still has a lot of growth, especially international markets. But the real growth for this company, in my opinion, in terms of, if we're thinking about the next 10, 15 years, it's really going to come from these Fox restaurant concepts, which they have a lot of them in Arizona. So if you're ever in Arizona, you can go to a lot of these concepts. I spent over a month in Arizona, so I went to so many of these concepts. It was, crazy, but I love so many of these, okay? Flower Child, Flyby, the Henry Culinary Dropout has a pretty big potential in my opinion. Blanco has pretty big potential in my opinion. Doughbird was packed. Oh my gosh, was that place busy. I wasn't the biggest fan of it, but man, other people were. The chicken wings were actually pretty interesting, good there. Olive and Ivy, which I really want to go to, but that was way too busy, so I couldn't even get into that place, okay? And a bunch of these other concepts. But let's be honest, the real big concept that's going to be the game changer for cake over the next 10 plus years is going to be North Italia. This is the next major restaurant chain you'll see in the United States of America. But it's more in the higher end, let's just put it that way. Then, something like Olive Garden really competes on the lower end. and, Olive Garden's not very good. I'll just, once you experience like good Italian food, like believe me, Olive Garden, you're not even going to be able to eat that stuff, okay? North Italia, I don't care who you are. You're going to go to North Italia very impressed. I don't care if you're a chef. I don't care who you are. You go to North Italia, you will be impressed with the food quality. I've tried just about every dish they have there, and it's absolutely incredible. Now, the other thing with the Cheesecake Factory is DoorDash, okay? So Cheesecake Factory has a very tight partnership with DoorDash, and they've been doing very well with DoorDash overall. Now, there's a potential that longer term Cheesecake Factory could, because Cheesecake Factory is basically exclusive with Cheesecake Factory North Italia and their other brands with DoorDash right now. But there's a potential that maybe they could partner with Uber Eats over time, or Grubhub, or some of the other folks out there. So that's just another, I think, potential for the company. They say, I listened to their latest conference call, they're still very happy with DoorDash and just using DoorDash exclusively. But my thought is, okay, that's fine for now, but I'm just thinking like longer term, they could expand with these other delivery partners, and it just gives them more visibility. At the end of the day, millions and millions of people are using Uber Eats, DoorDash, Grubhub, all these different services, Postmates, using these things on a daily basis. And to see it just there, I think is a valuable thing. And plus, obviously, it adds up to more revenue and more money for you at the end of the day as well, okay? Now, the way I look at PayPal and Cheesecake Factory, they're the definition of buy the dip and never trip, okay? Which is, is my saying, buy the dip and never trip. And these are two stocks that it's so easy. If they dip at all, it's so easy for me to buy these stocks. It's no like, oh gosh, man, I don't know, is this going to really go right? I don't know, I'm concerned. PayPal and Cake, that's easy, man. That's easy buys. And you know which one's another easy buy? Is another stock I just bought yesterday. And that stock is Amazing's on. Another very easy buy. Another buy the dip and never trip opportunity, okay? I bought another $6,000+ at Amazon yesterday. I've been buying Amazon very heavily the past, I would say 6 to 9 months now at this point in time. I continue to add to the stock. I don't even really want to talk about Amazon. I believe it was one of the stocks featured on 6 Stocks I'm Buying, July 2023 edition, which I released a week ago. So if you want to hear me talk about Amazon, if I recall, one of the 6 stocks in there was Amazon, okay? Next stock up here that I bought was Fubo, okay? I haven't been buying any of these unprofitable stocks for quite a while now at this point in time, and I don't know, man. The itch got me, okay? The itch got me. I've been a good boy for a while now. I've only been buying profitable companies that super solid. I took a risk, okay? I did buy some Fubo shares in relation to this. Oh, by the way, this is another reason Ally kind of sucks. You have to pay commission if you buy any stocks under $5 from what I saw. I was like, what $53 commission? What is this, the old days? When I signed up with Fidelity Investments, they used to have to charge, they charged me, $19.95 if I recall, every single time I bought or sold a stock. Didn't matter if it was like $19 worth of stock. You still got to pay the fee. It was absolutely incredible, right? But Fubo, I'll be honest, I haven't really been taking any substantial risk in any stocks. And, I just had to do it. I mean, at the end of the day, let's be honest, like stocks like Amazon, PayPal, those sorts of companies, Cheesecake Factory, those aren't going to 10x, 20x, 30x my money. Fubo, let's be honest, it has a real chance to, okay? They're not expected to have to basically issue any more debt. They're not expected to have to dilute shareholder value anymore. They're announcing some big news here recently. Spotify veteran Dan Sormaz joins Fubo to lead product design. They announced big partnerships with some baseball teams recently, big partnership with Ryan Reynolds going through right now. And so, there's a lot to be excited about with Fubo. It's a huge risk stock, obviously. Like, what if they don't make it through? What if they're lying about not having to raise capital anymore and they have to do it in the future, something like that? Those are always risk factors, and so it comes with a lot more risk than, let's say, an Amazon, a Cheesecake Factory, a PayPal. But the upside here is just like, it's crazy, man. It's absolutely crazy. And, look at this, okay? Their revenue was basically non-existent in 2019. Last year, they did over $1 billion of revenue. Who's scaling their business that fast? I can't even think of another company in the world that scaled from basically no revenue to $1 billion plus in that fast for a brand new business. Like, that's insane, okay? To put this to some more scale, this is a company that if you go back to the first quarter of 2020, they did $7 million of revenue, right? By the time we hit September 30th quarter, 2021, they were doing $157 million. And they've 2x that just in a very short amount of time between that September quarter of 2021 and the March quarter of 2023. They 2x'd what they're bringing in for revenue. Now they're doing, at this point in time, look at this. They're doing more in a quarter, and substantially more in a quarter than they were doing in all of 2020 for annual revenues. And probably by the time we hit at some point next year, they'll be doing more in a quarter for revenue next year at some point in time than they were doing in 2021 for the full year. That's how fast this business is scaling, okay? Now, obviously we're about to go into football season. Football season is, because right now it's July, right? So you have some college football start at the end of August. You have some preseason football start for the NFL in August, right? And then obviously the regular season, things go crazy for Fubo in terms of September, right? Everybody Google Trends it because at the end of the day, like if you're a football fan, the number one service you want to sign up for is Fubo, like over everything else, okay? YouTube TV is cool and there's, I don't know, YouTube TV is really the only competitive threat for Fubo. But at the end of the day, like especially if you're a college football fan or an NFL fan, like you get more bang for your buck through Fubo than any other service out there by a mile. You got more channels. You can put on 4 games at one time. Like it is the creme de la creme. And anybody that's a diehard football fan, like like Fubo's the best service for that, right? So that's coming up here. At the end of the day, when it comes to Fubo, as long as they can make it through this time period of losing money, right? We need to see them bring up that EPS, get their margins in a better and better place quarter after quarter. They've already started to make tremendous progress on this. We need to obviously continue to see this progress over the next several quarters. If they do that, man, I mean, the big question for me with Fubo, as long as they make it through, is this going to be a $5 billion type company, market cap-wise, or are we talking a $10, $20, $30 billion company? That's the only thing that's in question for me in regards to Fubo, as long as they can make it through. So it comes with this risk. It's a money loser, but dang, man, it's a hard one for me not to just be very, very excited about for the long term when I see everything that they got going on here. And being a sports fan and just understanding how valuable their service is, and just understanding they only have one major competitive threat, and their major competitive threat, YouTube TV, is like, of the things of importance for Google, like that's certainly not up there. That's like way down the list. I mean, they got Google search to worry about. They've got YouTube to worry about. They've got Android to worry about. So anyways, we'll see what happens with that one. That's the one risky one. The other 3 are just easy money over the next few years, okay? So appreciate you guys joining me as always. Hope you got some good value out of this video. Thank you so much for joining me as always. Thanks for being subscribed. If you're looking to apply for my private group, learn everything I have up here, all the knowledge, be part of the 6 and 7 figure members and all those sorts of things, then you can go ahead and check out the pinned comment down there and fill out an application. We'll see if you're a good fit for the private group. You might not be, and oh well, too bad, so sad. Much love, and have a great day.